Word. All right. Good morning, everyone. Thank you guys for joining us for this Homebuyers workshop that we have ready for you guys today. We look forward to being able to provide information that is useful for you to be able to progress in any area, to be able to purchase a home at any point in your journeys. Today, we are going to be joined by a credit specialist that we know very well and work alongside with very well. And we want to be able to have her share some information with you today. So as we get started, I'm going to go ahead and my name is Aisha Allen with Realtors of Fresno County, and I'm the current president for our organization. And I'm going to hand it over to Jeffrey Hess, our secretary, to introduce a little bit more.
Thank you very much for joining us today. I know it's a busy Saturday in the middle of July. It takes a lot for you to take time out of your schedule to be part of this, but this is an important way for you to start your home buying and wealth building journey. A lot of people have questions. Oh, where do I start? I don't know who to talk to. You're in the right spot. Sometimes this process can be really long and really involved. And what you need are people by your side that are going to take your interest at heart, listen to your needs, and really help you achieve the home ownership goal that you're looking for. So that's why we're here. We feel like there's an underserved market that we need to reach out to help them become involved in being able to access homeownership and build in the wealth building process that homeownership can provide. So for that, we do things like these meetings every month to talk to new home buyers about what they need to do to get into position to buy. We do larger events like cooperating with booths at Juneteenth and working with churches on the west side and other parts of town to outreach to people who are interested in becoming homeowners and seeing how we can help them out. This is a big part of what we do. We know that buying home is an expensive and complicated process, and that people want help and assistance that they can rely on. So we're here to provide that to you, and we hope that we answer your questions. And if you don't feel comfortable asking questions now, that you'll follow up with us later so we can help you along your way.
Awesome. Thank you so much for that. And Jeff, we're going to go ahead and get started with a quick prayer. Our chaplain is not here with us today, so I'll go ahead and do a quick prayer for us. Dear Heavenly Father, thank you for bringing us here today on one accord to be able to provide education to our community and provide resources that will help them in their journeys to being able to become homeowners, successful homeowners and generational homeowners, to be able to pass on that wealth to their family members for future generations. Thank you for all that you do for us. Please bring us here with an open mind to be able to grab the information that we have and to be able to use that in a productive manner. Thank you all for everyone who's joined us today, and let us begin. So now I'm going to go ahead and hand it over to Tamisha Steele, and I will have her go ahead and share our mission for this event.
Okay, so again, thank you everybody for taking time out your day to be here. Our mission, it shows the initiative is designed with a high level of comprehensive homebuyer education and counseling, financial literacy, first-time homebuyer workshops, down payment assistance, programs, grants, and flexible mortgage products and programs for the communities of Greater Fresno. The purpose of this innovative initiative is designed to increase the homeownership for low to moderate first-time home buyers in the Greater Fresno region. I don't know, my voice just kept trying to leave me.
Don't get stage fright now.
That's what happened.
Rosie, can you introduce us to our team, please?
Yes, of course. Hi, everybody. Again, as everyone, Jeff and Aisha mentioned, we definitely are grateful that you have joined us today, and you're going to learn some great credit information. So thank you again for being here with us on a Saturday, especially after a holiday. We truly appreciate it. So again, that is Aisha, our president, and we have Lionel, who is our past president, and Mitch Shaw, who is our chaplain, and then myself, who is Rosie. I am the treasurer, and then we have Jeffrey, who is our secretary, as well as a realtor, as well as a appraiser. So all jack of trades, definitely. And then we have Tanisha, our second secretary, and then we also have our members, who is Krisha and Annette, who also are definitely a true value to our team here. You're on mute, Aisha.
Oh, I muted, my apologies. Thank you. Rosie, Aldiva, are you ready for your presentation? You're currently muted.
I am ready.
Hey, thank you so much for joining us today. We're excited to have you. We appreciate you for your specialty, your wisdom, and all of the knowledge that you bring to us. I'm going to go ahead and stop sharing and we'll hand it over to you.
Okay, let me just get the slideshow going before I share. I'm going to share my screen. Do I have control to do that yet?
Let me make sure you do. And then just for our attendees, so that you guys are aware, please be sure to add any questions that you may have into the chat, and we'll get to those questions for you throughout the presentation, or we may put it off to the end depending on how many questions we have. You will be getting an email after this event with the contact information for our specialists and our realtors team in case you have any questions and want to continue on with your journey. There will be a link for a questionnaire so that we have a good idea of where you are and where we can place you to begin your journey and what direction to have you move in. And we'll send you a follow-up email after that with this video presentation so that you can go back and watch for any information or questions that you may have missed. So yes, you should have hosting powers now.
Let's see. Yep, there we go.
Perfect.
Okay, everyone. Well, good morning. I'm having the same throat issue here. Good morning, everyone. Thank you guys for being here today. And we all know how important credit is, right? In today's world, it affects everything. It affects your purchasing power. It affects you being able to get certain jobs. It affects you being able to rent. We even have clients right now who are qualifying to purchase a mobile home, but the mobile home park is disqualifying them from being a renter due to their credit. So that's just an idea as to things that are going on right now. So let's get started. If you guys have any questions, please put them in the chat. I will happily go over them towards the end in case I missed anything. And yeah, let's get going. So a lot of us don't realize that we have 100% control over our existing good credit. A lot of times we're told in order to get credit, you need to spend or max out your cards. And also, I don't know if you're aware of this, but the more you use on your revolving debt, the more you lose in points. So we're going to be going over that. So whenever we have a credit card, any type of revolving debt, even a home equity line of credit is revolving debt. Whenever we use 50% to 100% of our credit limit, we ourselves drop our scores 80 to 150 points in 1 month, just by maxing out the card or using 50%. So our goal is to only use 30% or less, and then our scores go up. So all of you have played on a teeter-totter as a kid, right? Hopefully you're old enough that you've enjoyed that luxury. So I want you guys to think of as credit as a teeter-totter, okay? So right now, both of you are level, okay? And when you go up, meaning your balances go up, your scores go down. When your balances go down, your scores go up. So when you think of a teeter-totter with revolving debt, it makes more sense in your mind, okay? So what is revolving debt? Like I said, it's all of your credit cards. It's a home equity line of credit. It's something that's unsecured. So the reason why revolving debt affects us so much is because we have 100% control over how much we're going to spend against our credit limit, okay? With that being said, we know if I max out a card, I'm going to drop my score. So you know now, because I just told you that. But you learn as you're monitoring your credit, you start seeing like, why did my credit just drop all these crazy scores? That's why you maxed out a card. Also with revolving debt, because it's revolving, so I could pay it, I could spend it, I could pay it, I could spend it. It's always revolving. That's what we have 100% control over. Another thing I want you guys to think about is there are two important dates on a credit card statement. One we all know, which is our due date. But the other one, no one ever teaches us, which is our statement ending date. Sometimes your statement ending date is 2 to 3 weeks before your due date. So what does that mean? What that means is that whatever balance you're carrying on your statement ending date is what gets reported to the bureaus. So you might be someone who pays off your credit cards every month, but you're paying it off on the due date. And maybe you're maxed out on the statement ending date. So what's getting reported? The balance on your statement ending date. So start paying attention to that. And on your statements, it's going to say, which I have a statement right here, actually. Let's see here. So like on my statement, I don't know if you guys can see this, but it says open closing date 5/23/23 to 6/22 of 23. So that 6/22, it doesn't show me. I can't show you because of the screen thing. But that 6/22 date on the statement is the ending date. And then my due date is July 19. So my statement ended June 22nd, and then my due date's July 19. There's your 3 weeks in between. So I know that TikTokers out there are saying, oh, make 2 to 3 payments and it'll boost up your scores. That's just a TikTok myth. It's not reality. The reality is paying down your balance before that statement ending date, and that's going to help increase your scores. Okay.
So it's not true if you make 2 payments before the actual due date, it's not going to trigger like a super increase in your credit score. Got it.
That's just people wanting views, but it's not true.
Okay, got it.
Yeah.
Okay, hello?
Yes. Oh, okay. So the next one is installment debt. Now, installment debt is really important, and I want you guys to understand.
Let me turn the TV down.
An installment debt has an ending date. So your car loans, a personal loan, your mortgage loan, anything that is a secured payment for a period of time is an installment debt. Now, let's pick on your car payment. You've never been late. You've always paid it on time. And here comes that glorious day when you finally make the final payment. What happens to that account? It closes. When that account closes, it dings you about 50 points. So you've never been late. You were always on time. You finally made that last payment, and now your debt closes, and you just lost 50 points. So be careful getting a lot of personal loans and a lot of like these short time loans. I'm seeing a lot of people getting 5-month loans. It helps you for a little period and it dings you. So be aware of that. Also, when you're buying a home, depending on the type of loan that you're getting, sometimes when you only owe 10 payments or less on a car, they don't count that car payment against your debt to income ratio. So what I tell my clients is pay down your car to where you only owe 10 payments or less. That way you could buy your home and you don't have to worry about them counting that car payment against your debt to income ratio.
Oh, that's a good way to think about it.
Yeah. And then some people are out there with these crazy car loans nowadays, $700, $1,200. That's a house payment.
Tell me about it. Yeah.
You know, so just keep those things in mind, okay?
Right.
Student loans. Student loans is also an installment debt. I really want to touch on student loans really quickly. If any of you on here have a student loan, guess who's knocking on your door? Come August 30, your payments are going to start being due. Okay. So if any of you are already pre-approved to buy a home or in the process of getting pre-approved, when you miss your first month of your student loan, they don't count it against you. When you miss your second month of your student loan, they don't count it against you. When you miss your third month, they will ding every single one of your accounts a 90-day late, and that can cost you your home. So
Wow.
please be proactive. Start reaching out to your student loan provider, start getting on a payment plan. And if it's in your budget to pay off your student loans now, everything you pay is 100% principal, 0% interest. So keep that in mind. But please be proactive, don't be reactive, because it can cost you your loan, especially if you're already pre-approved and you just haven't found your home yet. Make sense?
Definitely.
So this pie right here is really important. A lot of people think I have to have a car, a credit card, a mortgage in order to build up credit. That's only 10% of the scores, okay? The other 10% is getting new credit. 15% is length of credit history. So the longer you have an account open, the better it is for you. Now, some of you might have some cards that have an annual fee. Some of you might have some cards that have a monthly statement fee. What I tell my clients is this: you've already paid your annual fee. If your scores are almost to where you're about to be approved for a home, keep that card open a little bit longer. When your realtor hands you keys to your home, that means the loan's funded, title's recorded, the house is yours. Close the card at that time and take the 50-point hit. But don't take it right now while you're still paying on this, because we need your scores to be as high as possible in order for you to qualify to buy a home. Now, the other 65% of the pie, okay, which is the biggest portion right here, 35% is payment history, making your payments on time, not allowing yourselves to get a 30-day late. That really helps increase your scores. And the other 30% is how much you owe, especially on revolving debt. So you see how 65% of the pie is really based on payments and balances. Inquiries are only 10% of your score. So whenever you go retail shopping, and let's say you go to Kohl's, you go to Macy's, you go to Penny's, and everyone's like, hey, you want to save 10% on your purchase today? Just apply for a card. And you're like, yeah, sure, here's my social. Every single time they run your credit, it's 3 to 7 points. I always tell them my 10% one-time savings isn't worth my 30% interest, but that's just my opinion. So also, when you're applying for a car loan, you have 14 days to go shopping. Okay, so regardless of how many times your credits ran, and even though it looks really ugly on paper, it's counted as one inquiry within those 14 days. Okay, and then a car loan application or inquiry dings you about 14 to 20 points. When you're applying for a home loan, you have 30 days to go rate shopping. So regardless of how many times your credit is ran within those 30 days, it's counted as one inquiry. Now, on your FICO 8, which is a different algorithm, it dings you about 30 points. But on your FICO 2, FICO 4, FICO 5, which is your mortgage algorithm, it only dings you about 3 to 5 points. So know that. Also, when you're shopping for utilities, cell phone, insurance, depending on the insurance, some of them will tell you these are soft pulls. A soft pull is a way for you to lower your guard and give someone your social security number in order to run your credit, right? If your apps go off and they start going ding, 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 that tells you that was a hard pull, not a soft pull, because a soft pull will not register. Other things that affect your credit. So a new collection will drop your scores about 50 points in 1 month. Closing a credit card you're no longer using will drop your scores about 50 points. And too many inquiries will also affect your scores. So even someone with an 850 score, which is the highest FICO score you can get, can be denied credit based on too many inquiries. The reason why is if they see that you're running your credit a lot, now it looks like you're in financial distress. Why is this person running their credit? Why are they seeking money? What's going on in their lives at this particular moment? And that's why creditors will start to deny you based on too many inquiries. So your goal is to only have 6 inquiries per year or less. So most people don't realize that there's over 60 different FICO score algorithms out there, and creditors choose which FICO scores they're going to be accessing in order to approve or deny your applications. So why do we have 3 scores? Your creditors pay to report to the bureaus. Some creditors pay to report to all 3. Some creditors pay to report to only 2. And some creditors pay to report to only 1. So if they would all pay to report to all 3 bureaus the exact same way, we would have the exact same score between the 3 bureaus. And I just said that. Okay. So most common reports you'll be dealing with. Most retailers are pulling a FICO 8. Mortgage loan officers, or when you're applying to buy a home, they're pulling a FICO 2, FICO 4, and FICO 5. And Credit Karma is based on a Vantage score. It is not a FICO score. So if you're looking at Credit Karma, it's based on a Vantage 3.0 score. If you're looking at your Wells Fargo app, your CreditWise app, your Experian.com app, those are based on FICO 8. If you are applying for a credit card, it's based on FICO 8. If you're applying for solar, it's based on your FICO 9. If you're trying to buy a vehicle, it's based on your Auto Vantage score. So there's different permissible purposes behind the pull, and that's what determines why you're approved or denied based on the algorithm that they're using. A lot of times people will ask me, well, Allie, where do you think your scores are? And I'm like, well, tell me the algorithm that you're pulling and I'll let you know. And they don't even know how to answer me once I say them. So they're like, huh? So statutes of limitations, this here is really important. I know that all of you on here have an 850 score, but you guys have friends, family, exes that need help with their credit, okay? So any debt that's older than today's date, 2019 and older, in the state of California is not legally collectible by law. They only have 4 years to collect on the debt, okay? So, and it's not 4 years from the date you go into collections, it's 4 years from the date you last physically made a payment. So sometimes you have debt collectors calling you, harassing you, and they're like, you know, just give me a $5 payment and I promise I won't call you again until next month. And you're like, fine, I'm tired of you calling me. Here's my $5, leave me alone. That one $5 payment just gave them 4 years to take you to court if you default and don't keep on paying. So it's really important to know that. It's also important to know what time bar debt is, because sometimes people will tell you, go pay off this debt. It's not legally collectible anymore. You pay it off. Now, okay, so let's say that this debt is from 2017, August. It's about to fall off your credit report, but you just went and you paid it off. Guess what? Now it's going to become a paid collection for 7 years from today's date on your credit report when it was about to fall off. So really be careful when people tell you, just pay this, just pay that. No, no, no. You need to know if you're supposed to pay it or not. Keep your money, use that money for your down payment, not to pay off old debt. Okay. Also, if any of you guys are planning on moving to Kentucky, they have 15 years to collect on the debt, and Wyoming has 10. But California, Texas, Nevada were 4-year states. Arizona, Oregon, Washington, they're 6-year states. Like Maine is a 3-year state. So the statutes of limitations vary throughout the US.
I have a quick 2 questions. Well, one, will you be covering like how to remove credit items on your credit and things like that? We have a question about that, so I just want to check in.
No, because that's what we do.
Okay, so that's a service that you
That's
actually,
the service that we provide.
and there's a question on your thoughts on consolidation of loans.
Oh, I love that question. Okay. Be very, very, very careful. Okay. There's a difference between debt consolidation and debt settlement. And sometimes debt settlement companies portray to be a debt consolidation. Debt settlement companies, the minute you start paying them, they stop paying all of your debts. They allow you to charge off. And then as you're accumulating money in the back end, they're settling on those debts with that money that you're paying in. But if you ever look at the back office and pay attention, because a lot of people don't, you'll notice that they're only using about 30% of your money to pay off the debt. And the other 70% of your money is going towards their fees.
Ooh,
So really be careful with that and protect yourselves. Okay. A debt consolidation company, a true debt consolidation company, when you start making payments to them, they can either completely eliminate your interest or drastically reduce your interest. And they typically put you on a 5-year plan. And what happens is as you're making a monthly payment to them, they're paying your credit cards, your debt, and every month you continue to receive your invoices showing proof that the payment was made. They tend to keep about 8%, 8 to 10% of your payment for their fees, but they apply 92% to 90% towards your debt. So you really need to investigate these companies and make sure that you're getting in with the right one, because I've had so many clients come to us in tears because they thought they made the right decision and they ended up with a debt settlement company not knowing.
that's horrible. That is
Yeah.
horrible.
Yeah, but they don't know.
Right.
So,
You touched on debt, paying off debt that is older than 2019, you said. But in the comments, we have someone, Monita, who mentions that like they often resell the debt. So
Mhm.
does that necessarily re-trigger the start of that debt and having to pay it, or how does that affect it?
they can resell it over and over and over again. And yes, it'll look like a new collection, which AT&T for some reason is notorious for reselling it to IC Systems, and then
They
it'll
want
go
some
to
money.
CRC, then it'll go to someone else. But it really, your 4-year mark starts from the date of last payment. So sometimes I'm seeing some AT&T, and I'm just picking on AT&T because it came to mind. But there's plenty
Work
of
for
others that do this
AT&T,
too.
don't worry, I'm not affected.
I know. But yeah, it doesn't matter how often they resell it because they're just trying to get someone to get it paid. What
Mhm.
matters is when you last physically made a payment. They cannot reset your date unless you make a payment and you reset your own date.
Got it. Okay. So we
So-
should be disputing all of these. Okay, got it.
Yeah. So public records. So as of January 1st of 2018, judgments and tax liens are no longer reported on your credit reports. Only bankruptcies are. Bankruptcies will stay on your credit report for 10 years, but after 2 years of your discharge date, you can buy a home. You can actually be in escrow 30 days before the 2-year mark. You just can't close escrow till after the 2-year mark passes. So don't let a bankruptcy stop you and make you think that you can't buy a home, because you can't. We do public record searches in our office, and we look for red flag accounts. So I'm gonna give you guys some examples. Capital One, when they say what's in your wallet, I always say, hopefully not Capital One. Because if you owe them $1,300 or more, it is a guaranteed lawsuit. Bank of America is getting really aggressive right now. Citibank, if you owe them $1,500 or more, they're getting really aggressive right now. So we look for the red flag accounts, and if we see them, we're going to run a public record search and make sure that they haven't already initiated a judgment or a court filing against you, because sometimes we find them before you've even been served. So it's important to find those too, because If your goal is to buy a home and you have a judgment, and let's say that you had no idea, your loan officer doesn't use fraud guard because not everyone does. So you made an offer on the home got accepted, you go through the process, and now 3 days before the close of escrow, some title companies do it 3 days, some are sooner, but they run an SI report, which means statement of information. And now all of a sudden, here comes this mysterious judgment that pops up. And let's say this mysterious judgment's $10,000. You have to pay it or lose the house. So that's why we try to be really proactive and deal with these things before you get to that phase. Because we don't want anyone to lose their home. You worked so hard to get there, and we want you to go all the way through.
Most definitely.
I-10s, if any of you know anyone who has an I-10 number, that means they don't have a social security number, but they have a tax processing number that's issued by the IRS. We also help them and work with them. And they're also able to buy a home, get a credit card, buy a car. The only difference is they don't have a lot of down payment assistance programs that are available to them. So what happens when you make a late payment? So what I'm about to say is when you hit the 31st day, okay? When you pay a revolving account late, it will drop your scores about 50 points in 1 month. When you pay your auto loan late, it'll drop your scores 80 to 120 points. When you pay a mortgage late, your biggest financial purchase, it's a 200-point hit. So always make at least the minimum payment on time every month. No credit, how to get started. So I'm going to tell you guys what I don't like, and I'm going to tell you guys the loophole around it, the workaround around it. Okay. Number one, I love secured credit cards. I love working with our local credit unions. A secured credit card, you put down your own money. So you put down $300. It goes into a separate savings account that you can't touch. You don't want to spend more than 30%. So if you put down $300, don't spend more than $90 a month. That'll start building up your credit. It'll report to all 3 bureaus. Within 6 months to a year, after making your payments on time, you never maxed out, you're really responsible with the card, you can go back to the bank and say, hey, I'd like to convert this from a secured to an unsecured card. If you qualify, they give you back your $300 that was sitting in savings, and now you have a credit card that you can get credit line increases with. And it becomes a real credit card that's not backed up by your own funds. If you have any friends or family that have good credit and they can add you on as an authorized user to one of their accounts, you really have to have some hard talks with them.
Yeah.
Are you planning on any big purchases? Have you ever been late? Do you ever max out your cards? If they answer yes to any of those, do not go on that card. Because anything that they do on that one account will reflect on your credit. Okay, so you really want to make sure it's someone that you can trust. Now, when the card comes in the mail with your name on it, tell them shred it. I don't need the card. I don't even want to see the card. But all of their good credit, all of their financial responsibility on that one account will reflect on your credit, and it'll help boost up your scores. Okay, but please have those talks, because I've had some authorized users where the primary person is shopaholic, maxing everything out and tanking the other person's scores. And I have to tell them, please get off this card because it's hurting me. So things to watch out for. So here are the things that I don't like, but I'm going to tell you the workaround. I am not fond of jewelry stores, and I'm not fond of furniture stores. And this is the reason why. If I go into a jewelry store and I want to buy $1,000 necklace, they're going to say, congratulations, Sally, you're approved. Here's your new account for $1,000. Now I have a new account that's maxed out. It's a double whammy. The workaround is, go to this, if you really want to buy this jewelry or this furniture, go to the store, get the account, get the jewelry or the furniture, and let them charge it. But before you leave, pay $700. Now you have a new account at 30%. So it's just a different way of thinking about money to get you to where you want to be. Make sense?
Yes.
So this one here is really important. In order to do any type of credit repair in California, we must be bonded. We have to have a certificate of registration from the Attorney General's office and the Department of Justice. Every year, they have to review and approve our agreement, our advertising, our balance sheets, our profit and loss statements. And if you're caught doing any type of credit repair without being licensed in the state, you can be heavily fined and even lose your current license in whatever field you're in. So it's really important that you're working with someone who is registered. And now you can actually go onto their site and look up to see who's registered and who isn't. That just came out this year. So I'm really excited about that. And we have 2 physical locations to serve you. We're in Old Town Clovis and in Visalia. We are a trilingual company. We speak Spanish and Portuguese. And we also do consultations over the phone, over Zoom, in person. We're like Burger King. You can have it your way. So if you guys have any questions, give us a call and we'll be happy to help. So let's take a look at the chat. Is there any questions for me?
We kind of covered mostly everything. That the questions that were asked, we probably will have some more coming in. Question, are there monthly fees? Tamisha, is that for her services that you're asking?
Of course, there are monthly fees, and there's also monthly service with the fees. So what we do is that number one, when we meet with you, we have to make sure that you qualify for service. Not everyone qualifies for credit repair. Some people honestly need benefits. Some people just need advice. Do this and this and this, and your scores will go back up. Other people, they do qualify for services. So that's why we sit down with you. We go over your report in detail, make you understand what you're doing on your end, and also the things that we can help you with and the things that we can't help you with. Always keep in mind that you're in charge of the good while we work on the back. So, but yes, there is a monthly fee associated with that because of course we send off everything certified mail every month. So yeah.
So how does it work? They just schedule an appointment with you. You have an initial discussion to figure out if it's a good fit or not?
Exactly. Yeah. So you would just reach out to us. If you call us, Maria answers the phone and she's the one who schedules all the consultations. In Clovis, you would actually meet with me personally. In Visalia, it's with my team. And yeah, then we just go from there.
Awesome. So we do have a question from Viviana. It says, is it okay if we have no credit cards open, but we are on someone's credit line, therefore it boosts our credit line?
So when you buy a home, your lenders like to see that you have your own established credit. They don't like to see that you're only an authorized user. So please get yourself a secured card to get your credit started.
So starting off with being on someone's credit line just to start boosting your credit is a good way to start. And then when you have the capability of opening up your own either secure card or credit card, then go that route.
Exactly.
Would refinancing an auto loan hurt their chances of qualifying? That's a question from Diana.
So Diana, my question to you is how soon are you looking to buy? Because I want you to think of when you refinance an auto loan, you're closing an account to open a new account. So you're going to take that 50-point hit when you close this account. Whenever you lose points, think of sick time at work. It's quick to take away and slow to return. So they take away the 50 points really quickly. And then depending on how you're managing your revolving debt, in 3 to 6 months, you'll get your scores back. So
if you're like 3 months out, that's a good time frame.
Exactly. So if you're about 3 to 6 months out, refinance your car now, especially if you have a high APR. And by the way, EECU, they have really great rates right now on their refinancing the vehicles. So you might want to check them out.
Viviana asks, can you recommend some secure credit cards?
Yeah, so I love Valley Strong Credit Union. They're not in Fresno yet, but they're coming to Fresno. Right now they're in Visalia, they're in Dinuba, they're in Hanford. But you can do everything online.
Who is
There's
that?
Valley Strong Credit Union. Yeah, and they're a local bank, so I really like that. I also like, I don't like Open Sky CC. So let me tell you this. If you're someone who likes online banking, Open Sky CC is good. Discover is good. If you don't like online banking and you like to walk into a branch, then I like Valley Strong Credit Union. They don't do any credit checks. They approve everyone up to $5,000. Of course, you don't have to put down $5,000. They just say that you're approved up to $5,000. And they also provide you online banking and where you can walk in if something happens. So, but it's always up to you, whatever you are most comfortable with.
Esme asked, how fast does your credit reflect when you get a secured credit card?
So that all depends on their reporting period. On average, it's about 3 weeks.
Yeah, I actually started off with a secured credit card too, because at one point I just didn't have much credit. So, or a revolve, I didn't have many accounts open at all. So I
Yeah.
had to start off again with getting the credit companies to trust that I can make some great financial decisions. So I started with a secure credit card. And yeah, it was pretty quickly that my credit score started to increase. And I think after it was 2 to 3 months later that I was able to apply for a regular credit card without having to have it secured.
Exactly.
So it could be a quick turnaround.
Mhm.
Another question that's asked is there any amount that would not qualify for a loan? For example, the score is 780 and there is credit debt for 3,000, but for everything else is good on the credit report. That's just an example.
So I'm not a loan officer, but I do know that it's not based on your balances that affect your debt to income ratio. It's your minimum monthly payment. So on $3,000, I'm assuming your monthly payment's $60. So you would be fine. But again, I don't know your income. I don't know all that. And I shouldn't know because I'm not a loan officer. That'd be a great question for Rosie, because she is.
Rosie had to leave, so she hopped off, so she won't be able to address that question. But
Okay.
yeah, I'm similar. I'm not a loan officer, so I don't know the details of it. And there are several different qualifying metrics that they use to qualify someone. But a credit score of 780 would be great to be able to qualify for any loan program out there. But again, yes, they're gonna need to look at the details of your debt to earned income ratio.
Yeah, and keep in mind that any of you who maybe purchased a home in the past, but you haven't had any homes in your name for the past 3 years, you're a first-time home buyer again. So you qualify for down payment assistance programs and things like that. So don't be afraid to try.
Right. And another one of those great tips that we hear so a lot of the times too is that like if you went to school and then you got a job in the field that you have, you can get qualified to buy as soon as you get a job. And then and also that school loan, it's not all of the money that you owe that will hold you back. They're just again, similar. It's just the monthly payment that you have to make on that. So it won't necessarily prevent you from being able to qualify to buy. And Andres shares that SoFi is really good online banking too.
For a secured card. Yeah, I never looked into them, but yeah, thank you, Andres. I'll look into that too.
Jonathan, can you share what it is that you'd like her to repeat again?
Is it about the first-time home buyer?
Yes.
Okay, so if you previously owned a home, but you have not had a home in your name on anyone's title for the past 3 years, you are now considered a first-time home buyer again, and you now qualify for down payment assistance programs depending on your income and things like that. And a lot of people think that, oh, I've owned a home 10 years ago, I don't qualify. No, you do. Okay, so Jonathan, that's a great question. Let's say that you guys want to buy a home with multiple people, right? One thing that people assume is, well, I have a 600 score, but my uncle has an 800 score, so I'm gonna buy a home with my uncle. And let's say you have like 4 people going on to the loan. The person with the lowest score is what determines an approval or a denial. Okay, it's not the person with the highest score, it's the person with the lowest score. Also, we have 3 credit scores, okay, as you know. When you buy a home, your lowest score gets ignored, your highest score gets ignored, and it's your middle score that determines an approval or a denial. So keep that in mind. So if you guys want to see what your mortgage score is, you can go to myfico.com. It gives you a lot of the algorithms, but it especially gives you your FICO 2, FICO 4, FICO 5. If your middle score is a 640 or higher, you are ready to apply for down payment assistance for your home. Now, I don't know what your income looks like. I don't know what your debt looks like. I don't know what your ratios look like. But based on scores, that's a good way to get started.
Yeah, that's some great information.
Andres said, oh, it's not for a secured card, but it's a high yield savings account. Guys, let me tell you, what Andres is saying right now is awesome, because I personally have a high yield savings account. When you guys have a savings account, you get blessed with that little penny once a month, right? Here's your penny, congratulations, every end of the month. When you have a high yield savings account, like mine right now is earning 3.75%, I'm getting big deposit, not huge, but over $100 deposits instead of a penny. So look into those, because that's a great way to save money and earn money without you really having to work hard for your money. So that's a great thing. Andres is saying, on the lines of credit, I feel like I've plateaued at 750 and can't seem to increase it. I consistently have 0 debt at the end of the month. That's the problem, my dear. So in order to trick your algorithm to go higher, leave a $5 or $10 balance instead of a $0 balance. Yes, you're going to pay interest on $5 or $10. I don't care about that. But leaving a $5 or $10 balance tricks your algorithm, and it'll shoot up your scores higher more than having a $0 balance. Try it and let me know what you think. You'll be surprised. And I don't see any more questions.
No, it seems like, oh, let's see.
I got a handshake.
Yeah. Does anybody have any other questions on the topic of credit that our specialist can answer for you today? If not, no worries. I will be sharing her contact information with you in an email that will be followed up after this. Looks like we do have another question.
Yeah, does paying off a revolving card help? I'm working on paying down my debt, and I saw my score jump up 30 points after paying off 2 cards. That's awesome, Diana. Now, same thing I just told Andres. Instead of keeping everything at a $0 balance, leave a $5 or $10 balance, or maybe fill up a tank of gas, and let that $40 report, unless you drive a diesel like my husband does, and it's way more than that. But that will help trick the algorithm to bring up your scores even higher than keeping everything at 0. Because think of the teeter-totter. When you're at 0, you're level. There's nothing to push you up or down. You're just still. So hopefully that makes sense.
So we also got to use our credit a little, just even if we have it just sitting there.
You do. She's saying, so I buy small and pay maybe half and keep the balance going? Yes, ma'am. Perfect.
Awesome. All right, perfect. Well, thank you so much again, Allie, for joining us today. And thank you everyone for joining us and getting this information and gems that she shares with us today. I am going to follow up this presentation with an email that will be sent out to you all. It will have in there the list of our Realtist members in case you want to start working on getting your process or your journey to home ownership. And we can guide you through that process and connect you with specialists like Aldiva and other lenders in the industry to see what programs may be available for you.
Amy's asking any future workshops more for first-time home buyers.
Yes, there is. We have one a month for the rest of the year. And I will also, in that email, you will see the schedule for the remainder of the events that will be hosted. It's usually the first Saturday of the month, unless something's going on like a holiday or some sort. But we do have a full, well, the remainder of the year, we'll have one of these workshops a month. You can start registering for all of them if you wanted to attend every one of the events, and hopefully you can make it. If not, no worries. We will, again, share the information after the event with you guys. I will be sending the email. You'll have Allie's contact information, and I'm also going to put a link to our YouTube channel where I will be uploading the video once this video has completed, in case you want to check back in. But you can also check on our YouTube channel as well for previous presentations that we had with other specialists on programs available and information that is new to the in regards to real estate. More about down payment. Yeah, Daniel, you can reach out on that questionnaire. It asks a few questions that in the email that we'll be sending out to help us get a better idea of where you stand with your information. It'll ask some general questions like how much income you potentially have. Do you have any savings? If not, that's totally okay. It just helps us to guide, okay, to what lender may have a program that is a good fit for you based off where your starting point. So it gives us a starting point, and we'll give you some context for at least 3 lenders. That way you can figure out which one is a good fit for you and has the good rates for you as well. You do not need to attend any workshops, Lisa. And maybe you felt like you needed to, just to be clear, because it was on the City of Fresno website, if that's where you found us at. To be able to qualify for those programs, all you got to do now is just reach out to us, and we can connect you with the lenders that have the programs that you're interested in for that as well.
I think we missed a question from Diana. It says, if you want to buy within the next 2 years, is it too early to start meeting with them? So it's never too early. In fact, oftentimes it's too late. And what I mean by that is people find the ideal home, they meet with the realtor sends them over to the lender, and then your credit's not ready. So like I always say, be proactive, not reactive. If your Credit Karma, and I'm just gonna pick, I call Credit Karma credit drama, just so you guys know. So, I call them that because their scores are about 45 points higher than your mortgage credit score. So if both of your Credit Karmas are 685 or higher, because Credit Karma does not give you experience, then you have a high chance that your lender is going to pull a 640 to get you approved to buy a home. Okay. If your Credit Karma is under 685, then chances are you're not ready for down payment assistance. So keep that in mind. And again, that your highest score gets ignored, your lowest score gets ignored. It's your middle score that gets an approval or denial. Since Credit Karma doesn't give you your experience, you have no idea what your middle score is. So that's why you need both of your Credit Karmas to be 685 or higher, so that you have a higher chance of your lender pulling a 680. Now, why don't I like Credit Karma? Because Credit Karma is not connected to the credit bureaus at all. Credit Karma is directly connected to your creditors. So sometimes your lender might pull your credit report and they might say, hey, you're maxed out on this card. And then you whip out your Credit Karma and you're like, no, look, see, it's reporting that I already paid down this balance. Well, that's because Credit Karma gets the information directly from the from your creditors and not from the credit bureaus. So don't fight with your lenders.
I also had a question. Are you aware of any resources or pages to find accurate information in regards to your FICO scores? I know I was recommended at one point to use my FICO app, which you pay monthly for. And I like it. I like the updates and the information that it provides. It does provide the FICO scores, and it separates them based off the mortgage FICO, credit FICO, and then any other credit type FICO. So it's a great resource, but I do also know that I have clients who have used that same app. And when we sat down with their lender to check their actual credit scores with the FICO scores, it may have been off maybe 30 points. One client was 30 points higher and the other client was 30 points lower. So it did help us get more accurate than what we see on Credit Karma, but I'm not sure if there's any other apps or resources that you may have.
So anything that's free, like annualcreditreport.com, does not give you your scores. It gives you your credit history, but it doesn't give you scores. A lot of credit monitoring is based on the Vantage 3.0 instead of the FICO scores, because there's so many algorithms. And that's why it's really hard to pinpoint that down. Now, if you pull your myfico.com today and you meet with the lender today, the score should be the same. If you pull your MyFICO today and you meet with your lender 7 days later, it could differ because your creditor's statement ending date could have already went through and different things got posted. So that could throw that off.
Got it. Perfect. Well, thank you guys all again for joining us. Thank you so much, Ali. We appreciate you joining us and sharing all of that wealth of information.
I think there's some more questions.
Are you seeing some that I'm not?
Yeah, I'm seeing Diana. My experience score is decent.
Okay, go ahead.
My
Sorry.
mortgage and auto one doesn't seem to budge. Is there any way to bump those up? I would have to see what's on your credit report. It's so hard. It's like saying my car has a cough. So I would really have to see so I can really give you some in-depth advice. And then Andres said, you said mortgage lenders check your FICO too. So they're checking your FICO 2, FICO 4, and FICO 5. Okay. Is there anywhere we can check that, and how close is it related to FICO 8? It's about a 30-point difference from your FICO 8. So your FICO 8 is about 30 points higher than your FICO 2, FICO 4, FICO 5. And in case you guys are wondering, why are these scores, why is your mortgage scores based on FICO 2, 4, and 5? Is because Freddie Mac and Fannie Mae established these algorithms for the mortgage industry back in 1969. They're currently in the process of revamping to a FICO 9 and a Vantage 4.0. And we're going to be seeing that rolling out pretty soon, but it's not out 100% yet. But that's why they're using such an older algorithm. Ooh, Jonathan wants to buy a home in 2 months. Woohoo! We want to see that happen.
That's great. We're excited for you, Jonathan. Every person, like, it's exciting for us anytime anybody gets keys. Like, it's a big deal. We call it key day, and it's our favorite day.
Of course.
It's all of the hard work that you have to get just to get to the point of being qualified to buy, and then the whole journey and process of being able to buy. But that's what your Realtors team is also here for. We definitely want to simplify that process for you and take the guesswork out of it, and want to help you with that journey yourself. So if you don't already have representation, we'll be sharing that contact information as well. You can reach out to one of our Realtors members or interview a few of them to see who would be a good fit to work with you.
And you know, if you guys really want to have a smooth transaction, when your loan officers ask you for documents, get it to them as soon as possible. Because a lot of delays is because you got busy with life and you don't submit things in a timely manner. And that could be avoided. So just keep that in mind once the process gets started and you guys are approved and you finally make an offer on your home that gets approved for you to move forward.
Yeah, I had a client that, I had a client that ended up wanting to, she was going on vacation and she didn't share that information with her lender and the agent. And the hard part about that is when you leave the country, there are documents that you need to sign to be able to close. So if you're not going to be in this country, there are ways around it, but you have to get to the embassy to be able to get some of that document signed and prepared. And so it was just a whole other situation. So you do want to be very timely with what's going on, and you want to inform them if you're not going to be in town for any reason, just to make sure that it works with the timeline of things that need to be done, unless so that we can try to work around it, either expedite it and push the date and time ahead of time, or maybe postpone closing until you return back from any trips.
Exactly, Lisa. A pre-approval is not the same as an approval. A pre-approval just says, based on what we're told, we think you qualify for this. And it's not a guarantee. The approval letter is the one that says you qualify for this, and these are the terms and da-da-da. So Lisa's 100% correct. Well, it's 12:02, dear. We did it.
Thank you guys again. I'm sending out the email right now as we speak with the information, with Allie's contact information and one of our preferred lenders, Denise Ogata with Tri-Counties Bank. They're one of our lending partners. We can refer us of other lending partners based off of your circumstance when we have some more information. So feel free to click on that jot link form that comes into the email, and we will be sending, so it's sent now, so you guys should be receiving those to your emails right now as we speak. And we'll follow up this with the second email with the link to this particular video. But I did add the link to our YouTube channel so that you guys can follow along in case you miss any of our other presentations. Well, thank you guys all for joining us. We appreciate you for spending some time with us here today and learning some great information from our great specialist, Aldiva Rubalcava. Thank you so much, Aldiva. We appreciate you.
Thank you. Have a wonderful Saturday, everyone.
Thank you, guys.
Bye.